Good morning, Pat.
Good morning. How are you?
Oh, we're running a little late this morning, but we're doing good. We're getting ready for a kind of a get together up here today. About 20 people coming out and enjoying this. Let's see. Let me show this to you. This lovely weather we're having up here.
Oh, really?
It's high winds and rain the rest of the weekend. So it's, but you know, that's what you get for being just a few miles from the rainforest. So it's, but it's going to be fun. So you're going to be hearing the pitter patter of big feet upstairs and people talking as we go through this. But I'm heading back to Arizona starting tomorrow. So coming back home. So
good to hear. Good to hear.
Funny thing, this is an Airbnb, and so we're using. I mean, it's John around his place, and one of the reviews said and he's a young doctor from I can't remember the town, but on the review he goes, "Be aware, FYI, there are a lot of spiders by the front door." Well, there's spiders everywhere up here. So I've been making jokes every time I see a spider. I go, I think you need to burn the house down. So, but real estate, interesting week. I want to pop up just this thing here and show you the 7-day moving average. You know, this was the 4th of July dip, right? And Labor Day. I mean, look at how eerily similar that is.
Yeah.
We're just creatures of habit. But sales, while they are down compared to April and May, are still holding steady, and inventory is gradually creeping up, but not enough to make much of an impact. And Terry says, "Are you stocked up on beer?" Oh, don't even get us started, Terry. We're still having about a 300 unit deficit between homes going under contract and new listings coming up. So, but we're probably going to hit 8,000 listings tomorrow or this afternoon. We're about 400 shy of that. We're about 7,600 right now. So they are coming back, but according to the Cromford Market Index, and I want to share this with you because it's kind of surprising. We weren't, in this market right now, I just don't know what to expect. And we're seeing different things going on in different parts of the valley. And here's Fountain Hills. 639 on the Cromford Index, up 39%. And last month they were 460. Remember, 100 is normal, right?
Mm-hmm.
And you scroll down and you also see that Chandler went up 3% from 362 to 374. Tempe is still probably the closest one to being a balanced market out of everything else that's out there. But boy, Fountain Hills is they're on fire. Not so much that they're on fire from a sales perspective, but their listings are down to like 79. And sales have picked up, and most of their sales are from out of state. There's an NAR report came out that said that, let's see, what's the title of this? I want to find it here. It says 4 out of 5 real estate firms operated from a single office in 2020. But the number that stood out to me said in 2020, single office firms had a median brokerage sales volume of 4.5 million and 19 real estate transaction sides. Does that sound like a lot to you?
Yeah. Interesting.
Yeah. Oh, the one in the average office had like 4 agents that worked out of it, but they're only doing 4.5 million.
Total?
That surprised me. In the looking at sales nationally, it's also very confusing. The Redfin News says home sales fell 6% in August, the first annual decline in 15 months, but our sales didn't decline.
Mm-hmm.
So nationally, there are some places there that are getting bumped a little bit. But I wanted to ask you a question because I saw an article, and it's on CNBC, and it said student debt can make buying a home feel impossible. Here are your options. Have there been changes to make student debt a little easier when it comes to the new buyers wanting to buy a home?
Yeah, I mean, the last year, what they've done is overall, just to keep it simple, there's if you've got student debt, they basically lowered it from say 1% to half a point as far as how we have to hit people for debt to income ratio. So if you've got, say $50,000 in student loan debt, before it used to be basically 1%. Now they've lowered it to half a point.
Okay.
So instead of your monthly DTI showing $500, it's $250, and that $250 will make a big difference in debt to income.
So it's not completely knocking them out of the water now. They're getting some relief.
Yeah, there's some relief as far as how we're hitting them, from a debt to income ratio standpoint. Because like I said, a $250 a month difference in your DTI could be the difference between getting approved and not approved. Because a lot of times, when you run a deal, sometimes you could be at 44.9, let's say 44.9, but if you add in the student debt, all of a sudden your DTIs goes to 46, 47, 48%, give or take. I'm just throwing numbers out there. So that, when I run a DU or LP, desktop underwriting for conventional Fannie Mae or Freddie Mac, that a lot, more than not, I mean, it's a difference of, a couple $100 difference in payment to qualify or not qualify. Yeah, it definitely does make a big difference.
Well, I was looking at closings over list price again, going back and forth nationally. In April, 74% of homes nationally were going, it was a bidding war. 74% of homes are going over list price. That's dropped to 54. And I look at ours and we are now down to 51%. I want to show that to you, because I think that's an early indication of, let's see, I got to click one button here and click another. I think it's an early indication that the bidding wars are starting to subside, and that you can look ahead and say that perhaps the waiving of appraisals is let's see, here's how hot is Arizona from MD, and he goes, that's still a lot. He's talking about the student debt. But when I look at this Cromford report, let me pull it up here. There it is. Okay. What we're seeing is we're down to 51%. We had a high of almost 64% of homes going over list price. But what encourages me, Pat, is getting down here in the price points, like between 300,000 and 400,000, 4 and 5. The over list is like 12,600 and 13,000. We were seeing 20 to 25,000 just 3 months ago.
Yeah. Yeah.
Now, before the list price, the offer price versus the list price, well, it's shrinking. MD says 51% is still a lot. It is, but it means that over half of them aren't even coming close to that compared to where we were, and comparing the price point. So when you look at this chart, there's 1,487 homes in that price point between 3 and 4. Okay, so half of those, nobody, they got them for the list price. Now I've been able to get some homes at list price or below. It does happen, but I think before that list price, let's say it's not 51%, it gets down to 20. Before you get to that point, the first thing you're going to see go is the appraisal waivers.
Yeah. Yeah.
Are you seeing any relief in that sandbox yet?
Yeah. I mean, the purchases I'm seeing, I mean, it just seems like the overall, I mean, just to keep it simple again, is I'm seeing it seems like the pressure valve has kind of been released off of just overall in terms of this mad rush that we saw, January, February, March, April. And it's the law of economics, supply and demand. I mean, sellers were getting crazy with listing prices, but it was a frenzy. And every frenzy has a tendency to just basically pull back a little bit because the buyers are just getting buyer's remorse. They're getting tired. You're going to see that. You see sellers. I mean, it's just a pure economics at work. And obviously,
well, here's one here from KCH says just put in 3 offers in 15 to 30K over asking, was outbid by 50 to 100,000 each house. What part of town? I'm curious. Because I mean, I'm not saying that there isn't bidding wars going on up there. I'm saying that
there's bidding,
but they are coming down. but if you're out there in the street, it doesn't feel like it. So there's always a difference between statistics and reality, right?
Yeah. Yeah. It doesn't feel, yeah, you hit a good point. It doesn't feel as though, like you said, sometimes you can look at all the numbers, but you have to go by your gut and what you're seeing and feeling. That's kind of what I do a lot sometimes with rates, and I'll look at a chart and I'm like, I'm just not feeling it as far as I'm looking at the chart. And yep, it's my gut tells me something differently. You got to look at the numbers, but the feeling is that everything is just tapered down a little bit. Like I said, appraisal waivers, sellers getting crazy with listing their prices. Buyers just pulling back saying, I'm not going to spend $50,000, $60,000 over. It just, the overall mood feels like, hey, we're just going to tap down a little bit. So,
well, he's saying here that it's Chandler and Gilbert, 750 to 850 range. Yeah, those markets are still hot. Gilbert is slowing down in the $400,000 to $500,000 range, but 750 to 800 in Chandler is frenzied along with Gilbert. So we're not going to see that. Devin here's asked, for starter homes 300 to 400,000, are most loan applications single borrower, or do they essentially require a co-borrower?
Just depends on, the borrower. I mean, obviously the co-borrower is brought in to basically help the file. We still look at the borrower's credit. I percentage wise, no, they do not essentially require a co-borrower. If the single borrower can, stand on their own to qualify, they're good to go. And hopefully that answers the question.
Yeah, I think you're probably seeing qualification really hasn't been the issue in this market. It's the amount of cash that you have to have up front to win a bidding war or to overcome the appraisal gap. But
yeah, I mean, typically a lot of people I'm seeing, a lot of people be surprised at how, what I'm seeing is these young couples have relatively no debt. They don't have, two car payments of $400 or $500. They've been pretty diligent in, what they've been taking on debt wise. So if the husband works and makes, I'm just going to throw a number out, like say, 60, 65,000, the wife works, maybe she makes the same or more. I mean, a lot of times you have these couples making, $80,000 to $100,000. They have no debt. You can, qualify on your own. Typically, like I said, the reason you bring a co-borrower in is obviously, they just need a little bit more income, and you have to get all the information from the co-borrower too. I
read an interesting article this morning. The economy is going through a big shift overall, and that has ramifications, said Ben Bernanke, the Federal Reserve Chair from 2006-14. He's talking about why aren't these jobs being filled? And he goes, we are relocating where we want to work and how we want to work. People are trying to figure out what their best options are and where they want to be. One of the surprising numbers that came up said there were 3.2 million people that retired during the pandemic, and it was 2 million more than expected. And it goes, the article starts going down and saying that the industries that are getting hit the hardest right now, in recent months, healthcare workers and educators have quit their jobs at the highest rate on record.
Wow.
Well, they're under these mandates and these pressures, and they're just like, I'm going to do something else. So that's getting hurt. Now, I'm out here in the middle of flipping nowhere, up in the west end of Western Washington. There's one grocery store in this town that I used to work at. And I was talking to the manager the other day. He's a friend of mine. And their warehouse that was in Centralia, Washington, had to close because they had 50 people that came down with the cough. And they had to shut down. And the governor shut the warehouse down. And they had to get a hold of legislators and say, hey, we have to feed these people out here because the nearest grocery store besides this one is an hour drive. And so they had to get their groceries from California.
Holy mackerel.
Now I'm 20 minutes from the Pacific Ocean where I am right now. And I go into the store there's no fresh fish. We would have to drive 45 minutes to get salmon. That's what we were going to have for dinner last night. But they're just having problems getting everything. The store finally got restocked this week. But I
Wow.
walked in earlier last week and it was just gutted and just empty. But they're getting their groceries from California. And he said, you order 10 pallets of something, you get one.
Wow. That's the problem. I mean, this inflation, this transitory, they say it's transitory. This is all relating into the supply chain. It's all coming down through the supply chain. This is something that's not going to be reversed in a couple of months.
I read yesterday that Pulte Homes is once again stalling, postponing some of their new construction because they have some homes that are just sitting there on one phase waiting for materials for 45 days.
Yeah.
That's going to continue to put pressure on pricing.
Yep, exactly. In regards to on my end, just in the mortgage news, they did, that big news that about hitting. They just actually the FHFA did reverse their position on that second home investment property this week.
I saw
Did you see that?
Yeah, and that didn't really have an impact either, did it? Like we thought it was going to?
No, not really. No, I mean, yeah, that's the thing. A lot of times, people have a tendency to overreact to the news. Like, oh my God, what's this going to do to the market? And there's some things that will probably obviously have do some major things. Obviously, it did have a little bit of an effect, but it's just one of those things, a policy that they can change from one month to another, that they can ebb and flow the market accordingly. They probably did that too because a lot of people were getting crazy and buying second homes and investment properties, and they're probably trying to tap that market to discourage them, so you can obviously open the market to first-time home buyers versus second homes and investment properties. That might have something to do with it too. But there's a change in command as far as FHFA from Calabria to the new director. So you get these new directors that have new policy changes. So they can ebb and flow these policies and these and like I said, with DU and conventional loans, they can change their guidelines month to month by tightening up loan parameters. I haven't seen it really too much, but they can tighten it from month to month to say, hey, we're gonna start tightening up on the risk factors on every loan. So that 1 month you can get a loan approved, but the next month you're like, why can't I get this loan approved anymore? It's something happened. So, but that happened. I mean, on the foreclosure news, I saw something on MBS Highway. My subscription service said that they said they kind of broke down the forbearances, how they're going. I mean, they just some different numbers. It says initially 5 million in forbearance, and those that have exited so far, 13% made a lump sum reinstatement, 7% paid off the loans through their forbearance or home sale, 28% of them did deferral plans, commercial claims, 12% of the people of the 5 million exited into a modification, 16% of the people canceled without a loss mitigation. It says in process of modification or still being reached. So it says only 0.65% of exits to date have been into either other resolutions, which include short sales. So it says with 1.5 million still in forbearance, and it says if those numbers continued, there would only be 2,400 homes that would go into some type of short sale or foreclosure.
And that's nationally, and 2,400 homes in Arizona still wouldn't even put us up to normal inventory.
Yeah. So that just came out this morning. I mean, just some different numbers for people to chew on. So, I mean, there's a lot being worked on the forbearances. So, like I said, what we were talking about obviously months ago about, when the first pandemic started, what are these forbearance, you and I, you're like, hey, this could cause an issue. We have to keep an eye on it. And by keeping an eye on it, it has not obviously filtered into much supply.
Now we can make some safe predictions now. We're sitting here in the middle of September. One of them is that inventory will increase in October because it does every year and it is coming up. But the big predictor is it always goes down in November and December. So for buyers, you may not have a ton of homes to choose from, but October will be better than September. And we will see more pricing pressure through the end of the year, especially as you go into November, December, because there's just nothing out there. And then you're going to get more winter visitors coming out. But October is a month, I think, to watch and see certain areas of the valley where inventory may grow pretty good.
Yeah. Well, I mean, it's also the holiday. The last 20 years I've been in business, it's always the holiday effect. I always tell people the best time to be really looking for and buying a home is in the holiday season, because if somebody has to list their house, I mean, we talked about this before, but if somebody has to list their house, and sell it in November, December, you might find a gem, in the group, because most people are worried, they're thinking about Thanksgiving, Christmas, shopping. They're not really zoomed in as much on buying a home.
They're listing in December, and particularly around the holidays, because they have to.
Yeah, exactly.
And so that's the type of home that you can get, a decent price on, or at least get asking price, because they have to. And they're either moving for a job transfer, or they're moving to get close to their kids. But most people don't list their homes in December if they're just thinking, well, let's just try to sell the house. It seems like a good month. That doesn't happen. So Terry says here, I just noticed that Arizona has 4 HUD listings. Yeah, those not a lot to pick from out there, huh, Terry?
Yeah, so, that's exactly it. Well, another thing is too is just to kind of go back to my side of it. We're gonna see where rates are. Rates have been, the rates, the last couple of days have kind of popped up a little bit. I mean, we're seeing some, increase a little bit on the pricing side as far as, today, the bond, let me just see here. It's right now it is at, it's down 19 basis points. Yesterday it was down about 23 basis points. So rates are ticked up a little bit this week. They've been still in a kind of a holding pattern, but next week we get the federal open market committee, be talking about tapering. They've been hinting toward tapering. Obviously with the job miss, we had a huge job miss the other, that's giving, some, and I was writing this notes. I said, the job miss is giving, I'm trying to figure this out. If it's concern for pause or pause for concern.
Yeah, they don't, there hasn't been any consistency in the job numbers at all. So the Fed's trying to figure out what to do.
Yeah.
So rates are just kind of staying right in that 2.9, 2.97 range, right?
Yeah. Yeah. And I don't see them. If people think they're going to go lower, they might, we might see a pop where they go lower, but the last year they've been pretty, in the high 2 range, low 3s. And that's, I just see that as a floor. If they do see, I'm not going to hold out, hoping for rates go maybe down to 2 3/8, 2.5. Right now it still is a great time. But like I said, the jobs miss was given, the Feds, it's giving them fits as far as what they should do in terms of tapering. I don't think that the temper tantrum, we've been talking about it so long now, because last time when it happened in 2018, it was a shock because really nobody knew it was coming. Now the market kind of knows that, hey, the Feds are going to probably do something. Correct. I might be wrong. I have, I've been. Are
you following that big development in China with their largest developer out there?
No, I haven't. No, I haven't.
Their stock value has fallen by 80%, and they announced that they are not going to be able to make their interest payment this month. And it is their largest real estate holder in the country of China. And it's kind of China's Lehman Brothers.
Oh, really?
If that thing goes, they're going to have to restructure. So they're having restructure talks. But if it were to implode, it would have a global effect. And and then I heard some other numbers along with that said that, and my numbers will be close, but Los Angeles, to buy a home in California, it's 11 times your income. In Vancouver, British Columbia, it's 14 times the average income for a house. But in China, 46 times.
Holy mackerel.
That's how overinflated their real estate market is.
Holy mackerel. Jeepers,
so when it crashes, it's going to crash hard and fast.
Wow.
46.
Wow. Well, I don't see this, our market crash. Rents are up, like 12%? They said the rents are up 12% annualized basis. Demand is still strong. They said, I think Redfin put out a note saying the expectations, they're still going to see about 12% increase in home prices is projected. So things are still
rent went up 28% from 2009 to 2019 in that 10-year period, and 38% in the past 2 years.
Yeah. Yep.
So there's no relief in rent, but we're 5 million homes short nationally.
Yep. And it's going to take a long time for that to fill that. If we're building, the 5 million short, they said it was going to take us years. to fill that.
Yeah, we
No.
could be in this wheelhouse for a while. So
Yep. I mean, I just don't see if anybody's waiting for a crash. I mean, like I said, once again, we've been reiterating this for a long time, but the stuff that I see with the foreclosure stuff, I mean, I think we're kind of getting toward the end of the chapter there, as you can tell based on what I said. I mean, all the stuff that they're doing to mitigate, this stuff as far as, forbearances and, the foreclosures, the equity, it is kind of coming to bear. And, the story is kind of starting to unfold as far as like, hey, we're not going to see as much supply from these forbearances as we thought we would. Like you said, to repeat, like I said earlier, with 1.5 million still in forbearance, if those numbers that, the different things that they're doing, paying off the loan, going into modification, if they come to bear, there'd be only 2,400 homes that would go into foreclosure.
Yeah.
So,
yeah. Nationally. So
yeah.
that's I wouldn't mind seeing a little injection of 2,400 homes here. I don't want anybody to go into foreclosure, but it would be nice to see something happen. This has been a hard fall to predict. And fall, I mean, by time of year, I was convinced that in September we would start approaching 2019 inventory levels, and I could not be more wrong. It was going up, and then it just stalled. So it's a safe bet to say that we're going to be at 8,000 units tomorrow. Yeah, because we always go up 400 units. But I can't, and I can tell you that based on just seasonality, that October will be slightly better than it is in September, because it has been for every year for quite some time. But all bets are off on what's going to happen in January. I have no idea.
Yep.
It's usually when we get the most listings that come on, but who knows, right? So
I had just an example this morning. I had a client, another agent, they was looking at a house. House is just throw this example. A house was originally listed about 30 days ago at 464. Now it's listed at 449. And they probably can get the house for 430, 435. So, that's, you're probably going to see from some of these prices, probably a 5 to, 3, 4, 5, 6 price reduction. Like I said, people will look at these price reductions and say, oh, the market's starting to fall back. No, it's just, it's you're coming from a high level, you're reducing a little bit, but the numbers, they can skew the numbers to make news, the headlines and whatever they want. But
yeah, our price changes now on the 7-day moving average. Past 7 days have jumped back up to almost 1,800 homes.
Yeah.
That's 1,800 people that said, I thought I could get this.
Yeah.
Even though the price of the home has gone up and continues to go up, they priced it here.
Yeah.
And they're mad at their real estate agent. Their real estate agent is worthless. He doesn't know how to market homes.
Yep.
Nobody's coming to my house. That guy's just a toad. I've heard it all. And, it's my fault. I'm holding listings back.
Yeah.
Which is impossible. I mean, holding showings back. But this is the time when real estate agents get beat up really bad because of lofty expectations. So stop beating up your real estate agents.
Yeah. I mean, it's not, agents are, there's, if you got a good one, they know what they're doing, and it's just, it's tough. I mean, we're in this kind of churning period now. We saw this rush. Now things are it's like, real estate does kind of work like the stock. You see a stock make a run, it's pulling back a little bit, building a base, and we're probably going to. I foresee we're going to make another push. I don't see it going much lower. I mean, as far as, like you said, it's all about the listing prices and the expectations, and this is, for people to come out and say we're going to see a crash. It's just I don't see it happening. So, oh, by the way,
I'm going to be hitting the road starting Saturday. I'll be doing more shows. From
nice T-shirt, by the way.
What's that?
Nice T-shirt. Nice
T-shirt.
T-shirt.
It is, isn't it? Isn't that good?
Yeah.
So,
I got the hat and the T-shirt combination. So,
but I'll be broadcasting from the trailer on the road when I can on my way home. But other than that, I will see you next week, Pat. I'll be home.
All right, sounds good, Rick. Everybody have a good weekend.
Thanks. Take care.
Take care. Bye-bye.